My name is Sid Powell. I'm the CEO and co-founder of Maple Finance. We are the largest on-chain asset manager, and we have a focus on institutional lending. So we make over-collateralized loans to trading firms, asset managers, exchanges, where we provide them loans in stablecoins up to over $100 million in size. And we take Bitcoin, ETH, and other large cap crypto assets as collateral for those loans. So today, Maple runs over 4 billion in AUM, and I co-founded the company back in 2019 with my co-founder Joe Flanagan. And in the time since then, we've done over 9 billion in these institutional loans, and uh, and yeah, day to day, I'm the CEO, and so I spend most of my time on strategy, commercial relationships, and growth initiatives. Sure thing. So Maple's core business model is institutional lending. So we make a loan to an institution up to 100 million in size, and we take Bitcoin, ETH, Solana, XRP, so large cap crypto assets as collateral for those loans. And Maple's business model is to take a portion of the interest and then pass the remainder of the interest on to the investors who sit behind us, who are using Maple as a way to earn yield. The way that it differentiates from traditional finance is that we make all of our loans in stablecoins. All of our loans are indeed tokenized on the blockchain, so they're transparent, they're visible, and the fact that this is done in stablecoins means that we can operate 24/7 and reach clients anywhere in the world. So this is very different from traditional finance, which only operates during business hours and is indeed very geographically restricted in who they can serve. And of course, that other key difference is that we take liquid crypto as collateral. This means that we have very secure protection against the downside because assets like Bitcoin, of course, trade 24/7, tens of billions of dollars a day. Whereas if we were taking real estate or some other traditional asset as collateral, it would be much harder to liquidate. So that in turn protects our clients from downside. Maple's clientele on the borrower side includes institutional borrowers. So this will include firms like prime brokers. So think the likes of, say, a Galaxy or a FalconX. It can include exchanges. It can also include trading firms as well as high net worths or family offices. What do these guys use the funds borrowed from Maple for? Typically, it's going to be working capital. So it could be used in trading strategies. It could be to pay OPEX. We also happen to lend to some Bitcoin miners where they use the funds for operating expenses. And then on the other side, of course, remember that Maple is providing a yield product for other clients. So folks come to us and they want to earn a yield on their stable coins. And that yield comes from the institutional loans that we make. And these type of firms will include corporate treasuries, hedge funds, high net worth investors, family offices, and indeed, one of the more interesting categories who works with us is DeFi protocol partnerships. So one of our largest LPs today is Spark, which is part of the Sky ecosystem, and they use us to provide a yield which supports their stablecoin. We also have other DeFi users who come to us through protocols like Pendle or Morpho or Euler, and we're indeed working on partnership and integration with Aave as well. So in that case, what would happen is that a fund or DeFi user might come to us, deposit in Maple, and then they use the tokenized loans on the platform to post as collateral to another DeFi protocol and lever that up. That allows them to earn a higher yield on their initial deposit with Maple. So that's our core clientele. On the borrower side, primarily institutions, trading firms, crypto miners, and on the yield side, primarily hedge funds, professional investors, family offices, and users of DeFi protocols who ultimately want to come to us for a yield. For sure. So because all of Maple's loans are recorded on chain, there's unprecedented transparency there. And this also helps with liquidity. Now, this is recognized by a number of institutions who invest with us on the basis of that transparency and the fact that they can always see the performance, the size, the terms of those loans on chain. And we also provide real-time reporting on all of the collateral backing for those loans. So you can always see how much Bitcoin or ETH or Solana is held to protect the downside on those loans, as well as any payments that come through on chain. That trust enables institutions and investors to be more comfortable with us, and that has indeed helped them, commit larger and larger amounts of capital over time. And I think broadly, the impact of this kind of transparency is that you'll see more and more institutions and allocators move their asset management on chain over time because it allows their investors to get more comfortable with the performance that they're seeing and also more comfortable with the credit risk and the counterparty risk there. So I think a huge problem that we saw last cycle in 2022 that everybody would agree with in crypto was that there were too many of these black box lenders, whether it was BlockFi or Celsius or Voyager, and their users and their clients didn't know what was happening under the hood. They didn't know whether the loans were collateralized or not. They didn't know whether the borrowers were repaying or not, and they didn't know what kind of equity or reserves that the lenders had. So I think this is 100% necessary for the lending space to scale on chain and for asset management to scale on chain. And so we continue to believe that the transparency in our loan book is one of the core differentiators and is why Maple has been the fastest growing lender over the last 12 months, now hitting around number 3 or number 4 out of all of the CeFi lenders globally. So our AUM grew from 400 million at the start of 2025 to now 4 billion as of the end of September. Sounds good. So stablecoins are indeed increasingly important in global markets. Maple, since the very beginning, so going right back to when we did our first loans in 2021, has used stablecoins for all of our lending. We think that the important thing about stablecoins are that they allow 24/7 settlement with our clients, who are institutions for whom time is money, as well as global distribution. So we serve borrowers around the world, whether they be a Korean hedge fund or a family office based in the US or a trading firm based in South America. And so by being able to lend in stablecoins, we can reach those institutions wherever they are in the world. We've seen stablecoins today are around 270 billion on chain, and we expect that over time, over the next couple of years, that is going to exceed $1 trillion of stablecoins. And more stablecoins means that we have more assets to lend out, and it also allows us at Maple to be more vertically integrated and not have to rely on the banking system, which would have slowed us down and added costs. We've seen tremendous growth in Maple's Syrup USDC product, which is our permissionless yield-bearing dollar product. So Syrup is now the third largest among yield-bearing stablecoin products out there, after only Sky and Athena being the number 1 and number 2. It has over $1 billion in outstanding supply, and Syrup USDC is now integrated across Ethereum, Solana, Arbitrum, and is being pushed to other chains as we speak. The key thing about the product of Syrup USDC is that, again, under the hood, it is entirely over-collateralized loans to institutional clients. So it's institutional grade yield coming from curated opportunities. However, I think the thing worth noting is that it's incredibly composable because it is permissionless. So anyone can deposit to Syrup USDC and then take the Syrup USDC that's minted, and they can use it in Pendle. They will be able to use it in Aave. They can use it in Morpho and Euler, and they can trade it on secondary markets using Uniswap. So it means that there's more liquidity. It's more useful and composable across DeFi, and this has been a huge part of our strategy. and why today Syrup USDC is the largest product that we have, with over 3 billion in AUM of Maple's total AUM of 4 billion. So it's been our fastest growing product. It's grown over 10x in the last 12 months, and it is coming cross chain. So it is a core pillar of our growth strategy. The regulatory environment is incredibly significant for us because we deal mostly with regulated institutional clients, and so Maple has to navigate a number of different jurisdictions. In the US, Maple's products are offered under Reg D, which means they're available to accredited investors, and they sign agreements with us. So that has allowed us to operate in the US with our institutional clients there. In Europe, we have been setting up a crypto asset service provider entity, but again, we have a number of clients there, and one of the newer markets that we've been focusing more on has been Singapore and Asia Pacific. So at the moment, our products are available there because these are DeFi yield products, and they're indeed permissionless. So. And then on the other side, when we lend to clients, we always have legal agreements in place governing those relationships. And because our clients are institutional rather than retail on the borrower side, typically you don't require additional regulatory licensing there. But a big initiative for us this quarter is getting Cayman Islands Monetary Authority registration. So this will bring us under the purview of the regulator there, and and has been important for some of our institutional clients who are regulated in various markets. They like seeing that we will have a registration in place in the Cayman Islands where we have entities domiciled. So I think one of the things that has really encouraged us this year is that we've seen the opening up of the regulatory environment in the US. So Maple participated in the asset tokenization roundtable hosted by the Securities Exchange Commission in Washington, D.C. earlier in the year. And we continue to engage with regulators in the US, whether this is providing industry feedback on proposed legislation, or assisting them in kind of crafting regulation that will balance both consumer protection and ensure that the industry in the US can continue to innovate. So overall, I've been really encouraged by the regulation coming through. I think clarity is going to help the space move forward. And also in the US, we've seen the Genius Act get passed, which I think is going to be tremendously beneficial in increasing stablecoin supply, which helps a business like Maple grow, as well as the Clarity Act, which is expected to come before the end of the year, which will set out a market structure and include things like disclosures and and the treatment of tokenized assets. So I think those are incredibly promising trends for this year that we're keeping an eye on, and will ultimately help us and other institutional players within the space to scale. Yeah, sure. So the future vision for the Maple ecosystem is over the next couple of years, we want to get to 20 billion in loans outstanding. And the important thing is that the Syrup token ties all of this together. So unlike other companies in the space, which I think have not quite balanced the interests of token holders with equity investors, there is no equity entity in the Maple ecosystem. So all of us and every fund that has participated in any financing round are all token holders. So the Syrup token unifies the Maple ecosystem. It is ultimately what owns all of the economics in the system. And what we've been doing is there is a buyback in place. So Maple's economics are that we earn about 1.25 to 1.5% of all of the loans outstanding, which is around 1.5 billion today. So Maple is currently making around 19 to 20 million in annual recurring revenue, with a target of getting to 25 by the end of the year. The Syrup token benefits from that because 25% of all revenues that are earned on the protocol go towards buying back the Syrup token. So that's how we return revenue and economics to Syrup token holders. And over time, those repurchased tokens can either be distributed to Syrup stakers, or those will be able to be burned, which will reduce the outstanding supply of Syrup tokens. But the Syrup token underpins everything that we do and powers the ecosystem for Maple as the largest on-chain asset manager. Very good question. So Maple has always looked at asset managers such as Apollo and Blackstone and Ares in the traditional space as players who we aspire to emulate. So if you look at Maple's goals for the next 3 to 5 years, we see that presently there is around 20 billion of lending against Bitcoin. So this is around 1% penetration because Bitcoin is 2 trillion, lending is 20 billion. We think Bitcoin can at least double over the next 2 years to 4 trillion. And what this will allow is for the market of Bitcoin-backed loans to grow as well. So we think that can go from 1% to 5%, which is similar to equities. So at that scale, you would be looking at 200 billion in loans against 4 trillion of Bitcoin market cap. Maple today does around 5% of the outstanding Bitcoin-backed loan market. We have 1 billion on the 20 billion. And so Maple's goal is to get to 10%. So that would put us at 20 billion in loan book size from 1.5 billion today. And this would mean that Maple, at that scale, Maple would be earning 300 million in annual recurring revenue. And then that can be used to buy back the token. So our goal is to reach over the next 3 to 5 years at least 300 million in ARR and at least a $20 billion loan book. This year, where we stand today, we have currently 4 billion AUM and a 1.5 billion loan book. And our goal is to get to 5 billion AUM by the end of the year. So you can see that we have a long runway ahead of us in growth for the core institutional lending product. And that will drive meaningful revenue and meaningful buybacks to the Syrup token.